In today's video, we're going to be focusing on the 4-year cycle to better understand, is it broken, is it dead, is it over, does it even work? We'll be talking about that in a lot of detail to see if it's deviating from historical cycles, if at all. So let's dive into today's video. Subscribe to the channel for more videos like this in the future and like this video. Let's dive in. And January 2025, I posted this tweet where the 4-year cycle effectively began a new 4-year cycle. Really, in the final bull market years, which are candle one, that's when we begin a new 4-year cycle. So in January of this year, we began a new 4-year cycle. And every 4-year cycle takes 4 years to develop. So talking about the 4-year cycle being dead, being over, being broken in the very first months of this new 4-year cycle is a little bit premature. We're not too far away from closing this 12-month candle in just a few weeks, so we're just a year in. But even earlier this year, in April, May, people were talking about how this 4-year cycle is over and it's broken, whereas we're seeing anything but that. In January, I spoke about just the macro stages that we're going to be seeing, that 2025 will be the bull market peak year. 2026 is when we're going to be seeing bear market acceleration effectively. And if we just break that down candle by candle, then indeed, candle one tends to be the bull market peak year. Candle 2 is when we see the bear market acceleration, and then candle 3 is the bottoming out candle. And we tend to see those tendencies across the 4-year cycles every time. And without fail, thus far, also without fail. So we've been talking about this chart a lot thus far. That's January 6th. But we just want to understand whether we're deviating at all from the 4-year cycle tendencies. And back in July, and I have many tweets from even earlier than that, talking about how historically we tend to see 518 days after the halving, we tend to see a bull market peak take place. And we saw that in 2017. We saw us extend a little bit by 30 days or so 550 days in total. If we were going to see a 518-day post-halving peak or a 550 day post-halving peak, that would get us into mid-September or mid-October. As we know, we for the time being, people still think we're in a bull market, but if we have peaked, indeed, we saw, at worst, a bull market peak already in early October. At best, it's a local top. That happened in early October, so pretty much bang on inside this historical range here. We've also considered a potential lengthening here because many people have been talking about lengthening in this cycle, and we've been seeing some natural lengthening by 30 days or so. I've never really ascribed to that theory of potential lengthening because that's always moving the goalpost. That if we were to get a lengthening at all, it would be a lot shorter than most people would expect. Still, there are loads of people expecting further lengthening. But from my perspective, we're not going to be deviating too much from the historical cycles, that we're going to be following them. And that's kind of been my general thesis since 2022, really. So we have been very much in line with 4-year cycle tendencies. And we have pulled back since early October, so we've pretty much repeated history once again, which is in line with the 4-year cycle. But for these 4-year cycle tendencies to continue to repeat, we do need to end this candle one as green. And this is only really a $1,000 or $2,000 question, because this current level here of the 4-year cycle is 93.5K. And typically we tend to, maybe it'll be actually a little bit easier to do this on this chart here, because historically we tend to end the candle one as a green one. We do see diminishing returns, that's very clear across cycles, but we tend to end this candle one as a green one, and then it's only in candle 2 where we see pulling back and bear market acceleration. So we are in this current moment turning candle 4 resistance into a new support. I mean, at this moment, it's actually looking a little bit like resistance, but history is suggesting that we're going to get a green candle by closing on the 12-month above candle 4 resistance to keep it as candle 1 support. Very similar to what we saw back here. This was candle 4 resistance, here candle 1 support, which would hold, but then we would lapse and deviate into a bear market acceleration effectively. So this is a very similar situation to what we're seeing right now, with diminishing returns obviously factored in here. 93.5k should be able to be protected by the end of the year to 12-month close above it, and in early 2026 or maybe Q2 we see that acceleration, that breakdown from 93.5 to enter this sort of bear market acceleration going forward. And if we talk about, maybe going back to this chart here, if we talk about bear markets overall, where we bear market accelerate, we have never really tapped into the previous candle 1 and candle 2 and candle 3 resistances. Generally, we tend to develop, in 4-year cycles, we tend to develop 3-year resistances before candle 4 breaks that 3-year resistance. And even in this 4-year cycle back here, candle 3 never really tagged this 3-year resistance, but we were seeing a ceiling at this level for 3 years. Here it was the same thing, 1, 2, 3 candles rejecting from here for 3 years approximately, here as well. And we're probably going to see the same thing happen around these levels as well. Candle 1, 2 and 3 are going to be resisting from that price. We might be rejecting from that price of approximately 100k or so. Or it's just going to be a ceiling, and in candle 3 we don't actually get back into 100k, which is a possibility, a distinct one in fact, but we're going to be resisting from 100k for the next 3 years or so. And in saying that, we'll be seeing a bear market acceleration and a pullback most likely, if indeed we're going to continue following these 4-year cycles and the historical tendencies. And at the moment we're doing that pretty perfectly, and there's almost no room for us to say that we've invalidated anything, because everything is following through quite perfectly. And so if we see a bear market acceleration in 2026, then, historically we've never really dropped into that 3-year resistance for a retest. We'd get close, but we wouldn't actually tag it for a retest. Whereas in this cycle, maybe we get close to that region. I mean, we'll definitely get close to that region once again, which is the 4-year cycle resistance. The 3-year resistance in the 4-year cycle is around 46k, which means that we could be dropping to get close to this region. But at the same time, there's a good chance that we actually go and tag this region in picture perfect manner, because we've been seeing for example, 20k as an old all-time high in the 2017 cycle, that got deviated below in the 2022 bear market, and we actually bottomed at 15,500, so almost $5,000 below the old all-time high of 2017 of $20,000. So there is scope to get close to 46k, definitely. I mean, that's what's history is suggesting here. But there's also a very distinct possibility of getting into this level in a picture-perfect manner, maybe even deviate below it slightly in a downside wick. In these bear markets, we tend to develop downside wicks anyway. They're not very volatile. We tend to see much more volatile downside wicks in the bottoming out year in candle 3, although we didn't really get one in this cycle. But we tend to see these downside wicks in candle 2s. We tend to see them in candle 3s, not always. And so getting closer to this 46k region, maybe even downside wicking a little bit in that candle 2, those are all distinct possibilities. But it's very difficult to say that we've deviated from the 4-year cycle, that it's over, that it's broken, especially when things are following through quite perfectly in line with what we spoke about earlier this year. Things are really just playing out in line with the macro phases, but also in line with the timeline, where we tend to see peaks around 500 days after the halving or so. So the 4-year cycle, it appears to be followed quite perfectly, in fact. And generally, if you need any help with any guidance and navigating the market, feel free to book a call with me in the description down below. Feel free to click on the link to book a call and work with me, and you can hop on a call with me or someone from my strategy team for a bit of strategy and just guidance on how to make the most of this next period in the market that we're going to be anticipating over these next coming months. But that being said, that's about it for this video. Thanks so much for tuning in. I'm Rekt Capital, and I'll speak to you in the next one. Of course, subscribe and like this video if you haven't already. Thanks so much for tuning in, and I'll speak to you in the next one. Speak to you soon.